So I wanted to expound on my previous video as to why I don't recommend buying a vehicle in today's market, and if so, to pay for it outright in cash while of course negotiating a lesser offer. Now, I recently read an article on the record-breaking number of how many people are currently behind on their vehicle payments. Many people are paying at least $1,000 a month on a vehicle. Like that's not even worth it when you could put a few thousands of dollars aside and pay for a vehicle in cash. Maybe of a lesser value, but definitely of a lesser price, and that would still get you from point A to point Z. Now, if you remember what happened during the housing market crash that resulted in a 2008 global recession, then you should be made aware that similar events are currently taking place in the automotive industry. See, one of the main components that led to the housing crash that caused millions of people to become upside down on their mortgages and to lose their homes was that lenders were offering people subprime mortgages, and these mortgages made it easier for borrowers to purchase a home that they truly couldn't afford due to poor credit histories and low income and wouldn't have otherwise been approved for a traditional mortgage. And this is exactly what's happening now in the automotive industry. Because as of recent, car dealerships have been making more money from the interest on auto loans than they are from the actual sale of a vehicle, whereas back in 2010, dealers were making more money from vehicle sales than they were from auto loans. And this is why we have been seeing so many high markups from dealerships across the country on used vehicles, because with markups comes higher auto loans, and with higher auto loans generates more profits for dealerships, and they're able to do this because there's no real federal oversight on auto loans, while there wasn't much of an oversight from financial institutions during the housing crash because they were profiting from it. And guess where that leaves you? In not such a good position. So essentially, many car buyers are being offered the same subprime loans that people were being offered during a housing crash, but on overpriced vehicles that they really can't afford and that doesn't hold any value. Yet y'all question me about paying cash. Because while we're starting to see vehicle prices drop, interest rates aren't. And once you're locked into these loans, you're going to be paying more, like way more on a vehicle than what the vehicle is actually worth. Like, make it make sense. And good luck with trying to refinance that loan or selling that vehicle for any profit when it all hits the fan. And to take subprime loans off the table, the current interest rates, even with good credit in this market, still isn't worth it. Seriously, the only vehicle y'all should be spending that much money on should only be an investment vehicle. But nevertheless, just do what you can afford.